Hi, this is Paul from globaltradingsoftware.com, and this is a oil futures trading tutorial. We're using the xBrat Algo for signals. We're going to be using the bias depth heat map for confirmation, and then we're going to be using the manager to manage the trade. These two trades are from yesterday. And first of all, I've drawn in some support and resistance zones, and I've put all the entries in just to do it as a little prep. But going into the morning yesterday, we have this real strong support. So we're not going to short into this support at this point where we get this first 6-star. What we're looking for is more momentum to the downside, and you'll see that as the heat map starts to go from, we've got the green, the amber, the red all together, this indecision. But as we get this next 6-star signal here going testing this support, you can see all 6 timeframes on the bias depth heat map. So it's looking up, 6 timeframes are all red. So we've got some bearish bias there, and this is what we're looking for. The entry is below the low of the signal candle. That is the standard entry. It's below the support. Forget this one, this is for the long later. The stop we're going to put reasonably tight. We're not going to go all the way back up to this pivot because we've broken this support. We've got the bias depth heat map giving us confirmation of the signal. We're going to go short. We're going to put that initial stop just above this support and resistance zone and above the entry candle there. We then use the manager to trade it. The manager's set here to day trading moderate because we're on the 5-minute time frame. We're not scalping. Okay. We have the red ribbon here continues to come down and turns green at this point. That's when we take off the trade. Let's measure that. So we have just there 154 ticks, 154 tick winner on oil for the short going into the afternoon. So we then have found support, but one of the things I really want to look at here is as this starts to move away, and we can see the bias depth heat map going from more red to a bit of green and yellow, more green. We need to understand where we get some real support. This signal comes along at this point, but before then we've got some major pivots in here testing this level. We've got a pivot that was rejected at this point. So again, if you're an active trader, you should be putting these on your chart, and you say to yourself, if I get a signal, I'm not going long until I breach this trouble zone. Okay, we then get a 6-star signal at this point here. This is the signal candle. Now we're 5 out of 6 on that bias depth heat map. That's good enough for me when I'm day trading with a 6-star buy. Simple entry strategy again, 1 or 2 ticks above the signal candle. Again, stop, make it quite tight underneath. Let me just move this out of the way, underneath that support and resistance zone. There we go. So you just want to make sure that that stop is below the trouble, if you like. Remember, we're using the manager to manage this trade. The ribbon's already green and it's getting wider apart. We get this massive impulse move up here, testing these highs, this pivot high here, but continues to go. And this is where the manager really comes into its own. You see this pullback against the main trend. The dots on the bottom are lower than average volume. Don't panic. Also, the ribbon is green. That runs out of steam and pushes back up again. Two options here. We get a high volume rejection, higher than average volume, the dot above here. Second, we get another higher than average volume down candle. That's the time to get out at that close there. That is the what you would call the aggressive exit, and that is 219 ticks. So we really do have in one trading day, one short, one long in this case, we have 373 ticks in oil. Okay, at $10 a tick, that's a nice payday. Now if you are going conservative with the manager and waiting for the ribbon to turn red, in this case, it's around about the same. See, the ribbon turns red at this point here. Let's measure that from the entry. 236 ticks. So a little bit, by being a little bit patient and not being so aggressive, you could have got an extra 20 ticks. But for me, if I've got that much in profit right now, as soon as I see a higher than average volume, and again, in the links below, I'll put a link to the manager training video, because that's really important to understand the behavior to help you get in and get out of these trades at the right time. So again, really simple. I've used the xBrat algo for the signal, 6-star sell, 6-star buy, 12 points of control, you know, really strong signals. But we need to make sure we're above or below support or resistance. When that happens, we get the confirmation from the bias depth heat map. Again, signal, confirmation, entry. Then we manage the trade with the manager. So these three indicators together are basically a toolbox that you need to day trade oil, to day trade futures, or even you know, forex, crypto, that sort of thing. Combined together, they work extremely well. Again, I'm going to repeat myself: signal, confirmation, entry, trade management. That is the path you follow. Simple rules. Get the 6-star sell in this point here. We go short 2 ticks below the low of that particular signal candle. We go short. We've got the confirmation that all 6 time frames are red. So we've got signal, we've got confirmation, entry sensible, simple entry strategy, and then we manage with the ribbon until we get out and we take 154 ticks. Reverse side, we get a 6-star buy signal. We're 5 out of 6 on the bias depth heat map. We're good. I've got no red in there. I'm really good with that. Again, we've got the signal, confirmation. We've got the entry strategy, a couple of ticks above that signal candle. We go long. We then use the manager to manage the trade to maximize those profits. Very simple. Complex things happening behind the scenes with these indicators, but visually very simple to follow and very simple to trade. Hopefully that helps. Speak to you all really soon.